everybody, welcome back to the channel. We are back for another episode of the Daily Recap. Very exciting day in the global capital equity markets. We've got to talk about the Fed FOMC meeting that will be happening tomorrow. What is Jerome Powell going to say? What is he not going to say? We'll go through some of those details. Number two, we got NVIDIA GTC. It officially kicked off yesterday. Jensen had his keynote today. He said three major things that actually matter. A lot of the keynote mattered, but it was very technical. There was three kind of headline things that I think stand out that are going to be important to discuss, and we'll talk about the implications on NVIDIA. NVIDIA closed below 115 today, so stock didn't really care about that. And then very big day for Tesla, from potential regulatory clearances to beginning Robotaxi rides in California, from downgrades, and also different stuff going on with the brand positioning, which is not necessarily the best. There's a lot of stuff to talk about. A lot to get into. We got a ton of other headlines. Thank you all for being here. Let's get into it. Okay, so let's start off with NVIDIA. I think this was the hottest story of the day, and this was one of the most important things that happened today. There were three major things, again, that I got from the NVIDIA conference. Number one was this quote by Jensen at the very beginning of his keynote, which basically was answering everyone who went short because of DeepSeek, which so far hasn't been the worst thing to do, especially if you shorted at that 140 range. But this is what Jensen said. This last year, almost the entire world got it wrong. The amount of computation we need at this point because of agents and reasoning is easily 100 times more than what we thought we needed. So Jensen's basically saying, for all of you guys that have sold our stock because of reasoning and DeepSeek and R1 and what's happened from there, his argument is, yes, it was a phenomenal level of innovation, and it has absolutely reduced costs when it comes to the level of inference training that is happening on these models. And the models that he's talking about is when you click on deep reasoning inside of a ChatGPT or Grok question, and then it reasons with itself for 30 seconds before it gives you the final answer, which creates a much better answer, but it takes a lot more time because it's using a lot more tokens. Jensen's argument is, wait a second, that's good for us because that means we're going to need 100x, in the words of Jensen today, more compute. I think this made a lot of sense. I mean, at the end of the day, if we want to have more and more answers that are better from these models, especially in high-level tasks, not just these consumer subscription models, but inside of an enterprise, when you need to operationalize a workflow and you need to use a model and you want that model to reason to be able to get you a way better result on that workflow, yeah, you're going to need more computational power. And so from that perspective, I think it makes a lot of sense that I think we are going to need more output. The stock did not react to that statement, even though it's very bullish for NVIDIA investors. But yeah, the stock did not care. Second big thing Jensen said was that they announced GM as their newest partner for autonomous self-driving. Now, what's really interesting about this is GM shut down their autonomous partner, which was called Cruise, on January 29th. And a lot of people thought, all right, GM's throwing in the towel. It's Tesla's market to win. GM's not going to be taking autonomous seriously. They acquired GM for $1 billion a couple of months or a couple of years ago. And apparently they decided that they'd rather build on Jensen's Cosmos platform, which is NVIDIA's version of creating synthetic data to be able to train large language models in the context of self-driving, robotics, etc., and then produce what is a version of FSD in OEMs without actually having real world data, which is Tesla's proprietary data advantage. That's what NVIDIA is promising to these OEMs, and GM signed up to be their first partner. So I think it's really interesting. GM was like, hey, we're not going to be able to do it ourselves. We'd rather have Jensen and NVIDIA engineers help us do this because we don't believe we have the tech and the talent to do this in our own way, which is the brutal reality of a tech company. This is why I'm so bullish on Palantir and Robinhood. They have the best talent in the world to execute and get world-class products. You need the best talent in the world, and that talent, sometimes you got to pay up for it. But if that talent can execute, that's what matters. So it is very interesting that GM basically decided that we can't do it by ourselves. We'd rather do it with NVIDIA. And NVIDIA doesn't care if Tesla wins when it comes to Optimus and humanoid robotics, or if Tesla wins in autonomous with FSD. They just care about being the de facto platform that everybody else is using, whether it's in robots or whether if it's in self-driving, with all the OEMs, all the robotic companies. And if NVIDIA feels that they are going to be the operating system essentially for all of them and the training infrastructure via Cosmos, then that's NVIDIA's game to win. Final update on NVIDIA actually has to do with robotics. So NVIDIA, Google, and Disney have developed something called Newton Physics Engine, and it's expected to be available later this year. Now, we didn't get a ton of details on what Newton Physics Engine is, but it has to do with autonomous robotics, and it also has to do with the broader ecosystem around robotics in general. In addition to that partnership with Disney and Google, Jensen Huang said robotics could become the biggest industry in the world. And as a result, they unveiled Groot N1, which is an open source generalist model for humanoid robots. It's built as a foundation model. It unifies years of NVIDIA's training work. Jensen Huang highlighted robotics as, again, a massive super opportunity. And he said, everyone, please pay attention. This could be the largest industry of all. I've been very bullish on the humanoid robotics companies. I think it makes a lot of sense. I am bullish Tesla because of this reasoning. And so overall, I mean, I think what NVIDIA announced was spot on. You're going to need a lot more compute. You have all the OEMs that want to use NVIDIA over their own internal products, which makes sense because their internal engineers can't figure it out, so they'd rather work with NVIDIA. And then you've got this massive vertical outside of just ChatGPT, Grok, LLM, superclusters for GPUs called robots, whether they're tiny robots like Wall-E or whether they're legit humanoid robots that are going to be using either NVIDIA architecture in terms of their software or NVIDIA chips in terms of their GPUs. I mean, Costco is trading at a much higher expense than NVIDIA. So is Netflix. So is Walmart. I don't know why it makes sense to sell off NVIDIA, but the market is the market. The market's acting the way they've, acted. I bought more NVIDIA today at 116.45. Not a lot, about 5 shares. I have 805 shares. I want to finish out the position to get a full 1,000 shares. I'm just going to have to DCA those final 195 shares. But look, if we get below 110, if things really get flushed out, I think that's when I would start. If we get below 100, I might as well just finish the position there. But everything I saw today, I mean, it just feels more and more like NVIDIA is going to win this game. And the question is going to be when the street recognizes that. And to the street's credit, the stock is up a lot over the past year. But now it's in a consolidation phase where a lot of these earnings are getting baked in. The good thing is, as the price stabilizes or even goes down and the earnings keep going up, it gets cheaper. And in my opinion, NVIDIA currently is cheap right now. All right, next update is on Grab. This was an interesting one. Bloomberg reported this morning that Grab is getting ready to engage in discussions again with their biggest Indonesian rival, GoTo. Now, if you have been following the channel for a while, following the market open, market close stream, Grab is a position that I am pretty heavy in. I believe in this company. I have an asymmetric bet on it. I do believe it can get to $10 by 2027. I might be wrong based on Trump, volatility. I mean, who knows? At the end of the day, it's a bet. I think it can happen. I could be wrong. But in Q4, they had a good earnings. Not a great earnings, a good earnings. But the company's worth $17.5 billion. They have $6 billion in cash. The one thing they didn't announce, which was bearish to me, was an increase of the buyback. They have like $200 million out of their $6 billion in cash that they're using to buy back stock. That's nothing. And for shareholders, if you're not using that cash, it's just sitting there. Like, we want to know, what are you going to do with the cash? And so it's bearish because they're not buying back stock. But it was bullish, in my opinion, as well, because in my perspective, they're using that cash for a reason. And we already got rumors in early January that they were getting ready to acquire GoTo. You don't have to know what GoTo is, but it's their Indonesian rival, 30 million users, $1 billion in revenue. They're not profitable. They're down 70% from their IPO. Their margins are getting hit because Grab is undercutting them, but Grab undercutting them means that Grab has to undercut their own margins. And so Grab can be profitable because Grab's much bigger than GoTo, but Grab's not as profitable as they need to be. So an acquisition, a merger would solidify Grab as one of the big monopolies of the Southeast Asia region in all the different verticals that they operate in. They would bring in $1 billion of revenue, a ton of more earnings growth. They would be able to not have to get their margins get killed because they're not competing with someone anymore. They can actually increase prices, which is not the best for the consumer, but it's really good for Grab because at the end of the day, it can't be a race to the bottom. And they would become more of a company that has a moat, that has pricing power. So this is a really big deal if this ends up happening. Bloomberg is reporting that they're looking to buy them for about $7 billion. They have $6 billion in cash. I think it would be a 50-50, 60-40, 70-30 type of deal of stock and cash. But I think the market would be very happy with this because Grab has been a company that obviously has a lot of potential. The market knows it has potential. The market's waiting for that potential to be seen. They need to make a big move in order to get there. And this happens in companies, right? Sometimes they have to really pivot. Palantir went for AIP. Robin had completely decided to go for like larger accounts, wealth transfer. We're going to get share of wallet. We're not just going to focus on meme stocks and trading. And so these companies do these pivots. These pivots are then rewarded by the street. I think this pivot would be, hey, all that money we raised when we SPAC'd, Grab raised almost $5 billion when they SPAC'd. We're using that to acquire our biggest rival. Now, the deal's not confirmed. I'm not saying it's going to happen, but this is the second time in the past 2 months that we've seen rumors from credible sources that these conversations are happening. And if it actually goes through, I think it would be massive for Grab. It doesn't mean Grab's going to go to $10 overnight or anything, but the stock was up 3% on a pretty red day. I mean, the S&P 500 was down 1% today. Usually Grab would get hit by the algorithms. Why did it not get hit? Well, the market thinks there's a real shot that Grab could end up buying their biggest competitor. So Bullish grab. I still have my position. I will continue to hold my position, and hopefully they end up getting this acquisition to happen. Okay, next update is on Tesla. Now, three important things happened for Tesla today. Let's talk about the downgrade first, because I thought this is the reason why the stock really fell 5%. RBC, Tom Narayan, he is one of the core analysts on Tesla, has been following the stock for a while. He reduced his price target from 440 to 320. Now, you might think he reduced it because of auto sales and this and that and like brand damage, yada, yada. He talked about that in his report, and he said, yeah, that's like not the best thing in the world. But the reason he reduced his price target from 440 to 320. So RBC had a meeting with Mercedes, Mobileye, Aptiv, BYD, and essentially their argument was that some OEMs are using autonomy as a product differentiator rather than a revenue driver, meaning a lot of these OEMs are not really using FSD or self-driving, whatever you want to call it, as like a core part of the business, which means that level 2 plus autonomy is becoming a standard feature of a lot of these vehicles and definitely for a lot of these OEMs, which concluded Tom Narayan to say, it's not a question of Europe and China demand fears. He says word for word that those demand fears might be overstated. It's more so a question of, hey, is FSD even that special anymore? And that was really interesting for me to read today. Now, I don't think he's all on saying FSD is stupid. It's not going to work, yada, yada. He's obviously still bullish on energy, optimist, all that stuff. But this is one of the first times that he's come out. He's been following Tesla for a long time. And he says, hey, wait a second. Self-driving is becoming a thing that's just part of every car based on the meetings that we're having. And FSD is probably better. The neural nets are trained, yada, yada, in a much more sophisticated way. But is it that differentiated from some of the other names that exist today? And that one was a tough downgrade for me to read because, my thesis on Tesla more so is bots than FSD, but FSD is a hell of a thesis. And like, again, Tom Narayan could be wrong, right? But if a lot of these different OEMs just end up using the same technology, or that Tesla's proprietary data does not really give them a proprietary advantage, you got to ask yourself, where does Tesla get the multiple from when it comes to FSD? Now, this goes hand in hand with the other piece of news this morning that I think also took Tesla down in the pre-markets. BYD, Chinese automaker, who is the largest EV automaker on the planet, they created a new Super E-platform battery system that it claims can charge an electric vehicle as quickly as refueling a gas car, adding 400 kilometers of range in just 5 minutes. Tesla can only do 275 kilometers in about 10 minutes. Now, the counter argument to that is that the level of voltage you need in these supercharging stations is astronomical, and BYD doesn't have access to these many stations that have the infrastructure to be able to support this type of fast charging. But the reason I think the stock was down in the pre-market when this news dropped is because BYD has come up with the technology. If they can get the infrastructure, then you've got another, bad thing going against Tesla here, which is that BYD already is hyper competitive with Tesla. Tom Narayan just said their self-driving is becoming a part of the vehicle in respect to, it's not as good as FSD, but it's like not horrible. Level 2 already is there. And then they can charge the cars faster, which is what consumers care about, right? How quick can I get my car in and out from the charging station? So you just had two headlines that just weren't the best for Tesla. Now, thankfully, at the end of the day, we did get a good headline on Tesla, and that had to do with the Robotaxi. So Tesla has received its first approval in a series of permits needed to eventually launch a Robotaxi service in California. Bloomberg reported the California Public Utilities Commission granted Tesla a transportation charter party carrier permit, typically used for chauffeur-operated services. This allows Tesla to own and operate a fleet for prearranged employee trips, but does not yet cover ride-hailing or autonomous vehicle services. I actually read this wrong when it first came out on the market close. I thought this gives them full approval to do Robotaxi rides. That's not exactly the case. Tesla applied for the permit in November 2024, but is yet to file for the additional approvals required for full Robotaxi operations. It is a step in the right direction. Stock was up about 1% after hours because of this news. It is not full-on Robotaxis, but although there were two bad pieces of headline today for Tesla in regards to BYD and the downgrade from RBC, this was a good piece of news because they are getting that much closer to actually unveiling Robotaxis in California. We got to see how the June Austin launch goes. So if it goes well in Texas, it gives them the foundation to then be able to get through all the bureaucracy they need to go through in California. This notice today was a good step in getting some of the first permits out of the way. And then after that, hopefully they can expand across the entire country. Next quick update on Google. We talked about this yesterday. Google was reportedly in talks to acquire cloud security startup Wiz for $32 billion. That is official. Google has bought Wiz for $32 billion, the largest acquisition in their history, in cash. Now, this has not been approved by the FTC. I think it will be approved by the FTC because I think it's kind of stupid if Trump's FTC does not allow companies to innovate and potentially consolidate. Why? Because Alibaba, DeepSeek, and China, they're not slowing down when it comes to AI. I know this is not an AI deal, but you need Google to be able to have the infrastructure, the growth, the R&D, the shareholder capital, the ROI in order to pursue more AI initiatives. And them buying Wiz for $32 billion is $32 billion that they're not doing in buybacks, which I actually like as a Google shareholder. I'm like, dude, the buybacks are fine, and I get the stock is cheap right now, but the stock is cheap because you expect there to be growth, which means they need to grow, which means they need to inorganically acquire assets that can help them grow. This one, I think, has a great symbiotic relationship with Google because they sell GCP, which is cloud. Now they can sell cloud security, which is what Wiz is, on top of their core cloud product. And so I don't think it's a horrible deal. Now, granted, they did pay a pretty little penny for this. They bought Wiz at 32 times forward revenue. Wiz raised at $12 billion last May, and they had a $23 billion bid in August of 2024. So last May they were worth $12 billion. They doubled by August at $23 billion. That's when Google tried to buy them. Now Google ended up paying $32 billion. It seems like something in Wiz. It's very exciting for the company because Google could have bought back their own stock trading at 20 times earnings, but they're spending $32 billion in cash on a company trading at 32 times forward revenue, which to me simply means they think they can hypercharge the growth of Wiz, and they probably are missing some of their growth estimates internally. They need to inorganically grow. They haven't done a really big acquisition in a long time. Enter Wiz. Google ends up paying $32 billion in cash. Okay, next update on tariffs. Now, before I get into this, Trump did not talk about tariffs for the past couple of days. It's been about 72 hours, 3 days, where he's not talked about it, which is nice to see. So markets have tanked on everything else besides Trump talking about tariffs. However, Trump did have a phone call with Vladimir Putin today. They agreed to a friendly conversation around a ceasefire. And Trump tweeted out that he believes that Putin is getting very close to agreeing to all the conditions and that there will be an immediate ceasefire and that will set a framework for the end of the war. Zelensky commented, he gave out some public statements today, and he said he is not, essentially, he said he's not impressed with the conversations. He's not impressed with the negotiations. And he wants to talk to Putin and Trump to be able to meaningfully arrange a set of conditions that would create the premise for an actual ceasefire and then eventually war ending. All three of them are on the same mindset that it's time to end the war. However, the way you end the war, Zelensky was saying today that Putin's probably going to go after more land, and so I want to talk to Trump to be able to discuss how he plans to officially end this war. So I don't think we're any closer to a deal than we were a week ago. I mean, like, technically these conversations are good, but if Zelensky's not necessarily happy with it, you kind of need him to agree for this to officially come to an end. So I think that as a market catalyst for like the broader market to like price in peace, that's not happening for a while. I think there's a shot it happens before April 2nd. April 2nd is the big tariff day, which is going to be very important. I think that's what Trump wants to happen, but realistically, it might take some more time before we officially get a peace deal. Now, April 2nd is really important because Mexico and Canada are officially going to get tariffs. According to the Wall Street Journal today, Trump officials briefly considered a simplified 3-tier reciprocal tariff system featuring low, medium, and high rates. It's so funny reading this because it's like, do you want a large, small, or medium fries? It's like to streamline trade policy, but ultimately abandoned it in favor of tailored tariffs for each trading partner, with Mexico and Canada lobbying for lower rates ahead of the April 2nd rollout, while the team flushes to finalize deals, including anticipating new 25% tariffs on autos, semiconductors, and pharmaceuticals. My gut feeling is April 2nd, we don't get the tariffs. It's funny that the Trump team tried to come up with a low, medium, or high tier system. Then they realized, hey, we should probably be very specific for these products in these countries because these are like billions and billions of dollars that we're dealing with. But my gut feeling, and I'll probably be wrong on this, but my gut feeling is that we don't get tariffs. I think it gets botched. I think Trump figures out a different way. I think he gets a negotiation. I think they get a deal. I think they're working night and day to be able to get to some type of agreement that makes the United States looks good. We got concessions, yada yada. I don't think the tariffs go live April 2nd. And hopefully the market reacts once the tariffs don't go live positively and this growth scare kind of goes away. Maybe I'm being too optimistic there, but let me know what you guys think in the comments. Do you actually think April 2nd, the tariffs on Mexico and Canada, 25% on automotive, semiconductors, pharmaceuticals? Do you think that actually happens? Okay, next update is about JPOW and the Fed. So what's going to happen tomorrow? Well, I'll be live at 2:20 p.m. Eastern Standard Time. We will get the official data at 2 p.m., whether JPOW cuts or doesn't. There is a 99% chance that Jay Powell pauses tomorrow. 1% chance he cuts. Most likely than not, he will pause. That's not going to be, anything too surprising. What matters is what he says about the overall state of the markets. And quite frankly, I think he's going to be more dovish than hawkish because CPI and PPI is coming down. Core CPI and PCE and PPI are coming down. We saw that data over the past couple of weeks. And non-farm payrolls were good at 150,000. So although GDP estimates are lower, and a lot of that has to do with import data, and import prices might be a bit higher, and yes, tariffs are creating a ton of volatility, inflation's coming down, which is what Jay Powell cares about. And the labor market is not deteriorating, and maybe it will in the next coming months, but based on the data we've got so far in 2025, labor market is doing okay. So I don't think he's going to be hawkish. I don't think he's going to be super dovish, but I think he's going to be more dovish than hawkish. And the only thing I care about during this meeting, and that I think markets care about, is how close is he to giving us a cut in May. The probabilities right now for a May cut are 18%. And the reason those are that probability keeps going down is because the data we keep getting ends up being good. And in the context of the data being bad. So like retail sales data, for example, that was lower than expected, 0.2 versus 0.6. So that's bad because people aren't spending, but that's good because inflation is coming down. So theoretically, it should get us closer to a rate cut, right? Because if inflation is coming down, we should get closer to a rate cut. But Jay Powell and the Fed might be thinking, hey, let's get retail sales down enough to the point where inflation definitively comes down. Let's not cut rates and then re-stimulate the economy. And so that's why those probabilities might be going a bit lower, simply because the Fed is not yet seeing the level of weakness they need to see, which as a byproduct of that weakness would create inflation slowing down. The question, the nuance has been for the past couple of months, really for the past couple of years, how much weakness do we need to see in the economy for rates to come down or for Jay Powell to feel closer to getting rates to come down? And no one knows. I mean, we didn't get rate cuts till September last year, and we needed to see a decent amount of at least weakness in inflation for Jay Powell to get excited. So I don't know. It's going to be one of those events where all of us that watch the channel will be obsessed with every syllable that Jay Powell says because we're junkies for the stock market. No one else on the planet is going to be caring about Jay Powell, but we will. But I don't think he's going to say anything that crazy. I hope he talks about shelter inflation coming down and he talks about different verticals of inflation meaningfully coming down. Maybe that gets the market to feel more excited that he thinks inflation's falling off a rock and that he'll get closer to a cut in May. But we're going to have to see. I'll be live covering it. And hopefully we get some updates on how he's managing the labor market, inflation, and what that means for rate cuts. All right, that's it for me. Thank you, everybody, for listening and watching this episode of the Daily Recap. We will be live tomorrow for Jay Powell at the FOMC. And we'll see what he ends up saying. As always, enjoy the bloopers. Bro, my sister just came home and she opened the door and my dad was like, what was that sound? And my sister was like, what sound? What are you talking about? And my dad's like, I heard this loud sound. That was my fucking sneeze, bro. Turns out GM didn't trust themselves. They acquired Cruise for about $1 billion bucks a couple of years ago. I think I just glitched.